On this episode, we are talking about order block. I know we talk about Fibonacci retracement, and we said let's look at the zones at which you want to buy or the zones at which you want to sell from. And if you are talking about zones, we said if you are looking for a sell, you want to sell from premium, and if you want to buy from discount price. Looking at this chart, your order block is more or less your point of interest. It's more or less the exact point in that your premium or your discounts you want to join the market. And I have a rule that gave me a valid order block. Now, the first thing you need to understand is a order block is just a combination of two candles. Look at my chart. We have a sell to buy candle or a buy to sell candle. So order block is just a combination of two candles, a buy to sell candle and a sell to buy candle. Now let's look at what makes my order block valid before I even start trading order block. The first thing is my order block must break structures. That's very important. So that means my order block should be able to push up, right? Taking out maybe the previous low or the previous high based on the direction you are going to. That's one. Two, my order blocks must has volume. What is volume? That's what we call imbalance in the market. Yeah, I'll still be talking about that. You guys understand that. So like now, looking at what I have here, if you see that I have the open space to this particular level, for me, this is a kind of imbalance here. Why the third one said my order block must not be mitigated. Now, if you see what happened where the market did what retrace back to this particular level, mitigate this will be before going up. So mitigation is something I will also still be discussing. So that's why it needs to follow up with this series so that you can understand it one after the other. So we are looking at one, my order block must not be mitigated. It must have volume, which is imbalance. Then my order block must break structures. For you to identify that particular order block, you are looking at those basic things as a kind of additional conference to prove to you or to show you that your order block is valid. And looking at what we have on the chart here, utilizing the order blocks, which is here, within your range, will give you a high confidence entry point. Yes, that means the level you are looking at, you want your order block to be in a very good level. That is your discount or your premium price. So that means the order block in your premium price is what we call the supply order block. Why the one below your 50%, which is discount price, is what we call a demand order block. So it depends on what you are the movement you are going, either you want to sell or you want to buy. So here, when a bullish impulsive waveform, these are just stories that give you a kind of understanding about what order blocks really looks like. As I showed you here that your order block is the last buy to sell and market, the last buy to sell candle or the last sell to buy candle, depending on the direction you are going. So let me show us samples of how your order blocks looks like. Okay, I think we have a very good one here. Look at the chart here. The first thing you need to understand is this is the last sell before this buy movement. That is very important because this thing showed you. I'm very sure a lot of us have been seeing this and we know how to mark it out. So we are trying to have a series that build a kind of trading plan in respect of how we approach the market. So let's look at it here again. So we have a kind of bullish movement that gave us this low. We now notice that within that range, the market print this particular red candle before the impulse movement. So for us to create that rule, don't forget that our order block must have some basic rules. The first one is one, my order block pushed up. What happened? It breaks structures. That's the first condition. Does it have imbalance? Yes, we have a very big imbalance to be filled. And has it been mitigated? As at the time doing this, because the market has already mitigated here, that means the market has done its thing and now you expect uptrend movement. That means the market should continue going up. So for you to have a valid order block, this is for a bullish order block. Why? here is for a bearish order block. You need to understand that your order block is just like more conferences for you to trade with confidence because you already know that that other block is within maybe your the other block is within your discount price if you are looking for a buy or within your premium price if you are looking for a sell. And the best advice I would give is once you are following up this particular series, try to pick it one after the other, right? And try to check your trading plan. Does it align with what you've been doing before? Then don't just look at this video and start trading. Try to run some back testing, trying to run a kind of go through your chart and see that okay, the condition I'm giving you guys based on what is the other block, does the market really give you a kind of entry conditions? Or are you also seeing those things? And that will make you know something about the market is you must master the market. You cannot just jump in or jump out. It looks as if you are gambling. But when you have that rule based system to follow it up, it makes things very easy for you.